Okay, guys, what's up? It's been a minute, right? I haven't dropped any analysis for a while, and that's because I've been busy with other things, right? But getting back into the game, um, I'm just gonna share my analysis on what happened last week, the trade I took, why I took it, and how it played out. I'm gonna be sharing, showing you guys what I did. So this was the dollar. I was expecting to buy the dollar for the week, right? And it gave me a good entry. I think this was on Wednesday or Tuesday. I don't trade Monday. And then the price rallied up, which was good, and then came back down, right? But I added the second position, and both positions started to rally up and up. And I took the opposite on EU, which was a sell, right? So I'm going to be showing you guys how I cut that position and my thought process towards the dollar. Okay, so this is the weekly open, right? This is Friday. This was how the market closed. This was how the market closed on Friday, right? So now the first thing I do, is I like to draw my ranges, right? Now we can see this is a higher high, higher low, higher high, and then a break of structure, right? So what does this mean? This means that I'm going to prioritize these highs. This means I'm going to prioritize this high. This is going to be my key zone, right? So this is where I want to take the dollar to. If price is just retracing back into these highs, right? And for this week, now we can see that price was bearish, lower low, lower high, lower low, higher high, higher low. So we can see that price broke structure here. And also, it is not a coincidence that we have the monthly opening price, and this is also a monthly price. So below this monthly price, there was a manipulation of this low, right? So after price manipulated this low, we had a break of structure telling us that now we are bullish. And if price breaks structure, the first target is going to be these highs before price comes back into the lower high, right? So I already knew that we were bullish on the dollar and price was creating higher highs and higher lows. And then after creating a higher high, price came down, right, into a key zone of imbalance and then broke back above, right? Now, this is where I started to get ready for the week. So I already had it in mind that price was reacting from this imbalance. And then price was trading above this candle's high, or I can use this candle above this candle's high. So we can see that price is already active from here for a buy, right? So for this coming week, this was a weekly opening price, right? So for this new week, I don't trade on Mondays, but I trade Tuesday, Wednesday, Thursday. So in this zone, we can also see that price was creating higher highs, higher high, higher low, higher high, higher low, higher high, and then a break of structure. So when price broke this structure, then it came back into this lower high. It swept liquidity, right? And then it broke this structure. And then price came back into these lower highs. And this was where I sold. This was last 2 weeks. I actually caught this sell last 2 weeks, came back into the lower high, and then continued selling. Pulled back after breaking this structure now again, right? It came back into this lower high, and then we're expecting price to go down. So for the new week, this was what happened this week. I was already holding a sell position right around here. I was holding a sell position around here for the week, and my TP was around this level, just below the weekly opening price. My TP was around here. So on Monday, I didn't trade. Got out of this trade on Monday. out of this sell. And as you can see, price just kept making lower highs and lower low, lower low, lower highs. It just kept melting. So on Monday, after price broke this structure, it came back into the lower high. So you could have also gotten an entry here. You have a lower low, it came back to the lower high, and then continue to sell down into the key zone. So this is a lower high, and we know price is active from this zone, from this candle. Price is active from here. So the next zone that I would be looking to buy would be this zone, right? So I don't trade on Monday. Monday has played out. So this was how I got my trade. I was looking on for Tuesday because I know Tuesday always sweeps liquidity. So price came into my key zone on Tuesday, and there was a breakout structure. So this was where I got my entry. This three candle is an entry pattern in my strategy, which is a CROT low, and we have a CROT high. And whenever um the candle that breaks above the CROT, that takes the CROT high, if it closes above the CROT high, that's a bullish candle. So it's telling you it wants to go up. But if it takes the high and closes below, it's telling you it wants to go down. So when I saw this bullish move, I had confidence that price was going to sell. There was this imbalance, which was also good. There was this imbalance, which was also very good. I was looking at this other block. I was looking at this other block to buy from. So you see, this was the setup I had. You also have a 30-minute ROT if you wanted to use a 30-minute ROT. So now we have, I think I used the 30-minute ROT. Let's see. Okay, this is 1 hour. This is 1 hour. As you can see, this is exactly the same entry. Um, this is 30 minutes here. So this is on 30-minute time frame, right? So on the 30 minutes, we have price, we have this key zone, right? We have this key zone. This is our key zone, and this is where we want to buy from. So the entry, first entry was placed exactly just like this. And my target was these highs. We have these highs as targets, you know. We have these highs as targets, which is the highs of on Monday, right? Then again, we have these highs. This is the highs of on Friday. We have the highs of Thursday. And I think, yeah, we have the highs of Thursday and Friday creating kind of like an equal high. So this was the target for the week. So from these key zones, from this other block, from this lower high, higher low, from this higher low, I was already expecting price to go up. You can see how price used the CROT high as support after breaking above it to go back up, right? And so the first target was met, take some partials. And now, what do you see happening here? You see that we were in a bearish trend, price creating lower low, lower high, lower low, lower high, lower low. But as soon as price came into the key zone, right? As soon as price came into our lower high key zone, price broke structure. So now we have a break of structure. And then, excuse me, price broke structure, and then it came back into the lower high, activated, and then broke structure again, taking the liquidity. So you could have easily closed your trade right here or closed partials because you know it is going to come back to the lower high. So it came back to the lower high again. And so we'll be looking for exactly the same thing. We have the CRT candle right here, CRT low, CRT high. And then we have this last other block right here, right? That's another block because if you look closely, this candle swept these equal lows, right? Swept those equal lows. swept these equal lows. After sweeping the equal lows, we had an engulfing candle. This candle engulfed. So this is an entry pattern, right? You can see how it aligns perfectly with everything, right? Everything is perfect. So this engulfing candle was our break of structure on the lower time frame and our entry to get a re-entry. So obviously, you just put your entry here, stop loss just like this, and then you continue the trend. Now you can just put it like this, and now let's see what happened. So price dipped in one more time to sweep these lows. It created equal lows and swept it, and then broke above. So again, we have this price now closing above this candle, which is a break of structure. Now I want to show you guys something on the 1 hour time frame, or I think 4 hour time frame. Yeah. So on the 4 hour time frame, I was looking at this particular candle as a CRT, as a 4 hour CRT. So this particular candle, this particular one candle, I was looking at it as a CRT. So the highs. Why? Because this 4 hour candle took the lows but closed above the candle. So I was looking at it as a CRT candle, and then the next candle started to rally. So I knew price was going to come for the highs. So now what do we see here? Right. The market is changing its trend. So from a bearish trend, after coming into here, it broke structure. Now, after breaking structure, it came to the lower, higher low. And now this is a lower high, lower low, and then a break of structure, higher low. And now it has started creating higher high. So this is when you start adding more positions to your positions. Every higher low, you start adding more positions to your position. You understand? If you trust your system, because now the trend is back in your favor, right? So you just keep adding more positions. All right. Of course, you have to put your stop loss in a very good place. So as you can see, it came back to the higher low and it's going back up. Right? As you can see, it didn't break this structure. If price had broken this structure, if price had broken this higher low, then I would know we'll be bearish and I would be selling from this imbalance, right? But because it did not break that structure, I did not pay any attention to the imbalance and I just kept holding my trade, both positions, right? So price just kept breaking structure bullish. And so I just held the position. This is Wednesday. This is now Wednesday, so I have two positions running already. And you see how price just continue to go back up and up. Price came back again because now we're creating higher high, higher low, higher high, higher low, higher high, higher low, higher high. So you have to completely trust the system. Just because the market breaks like this, right, doesn't mean that it's now bearish, right? Until this low is broken, we are not bearish. So this is just another opportunity to add another position on Wednesday. So every day is going to give you its own entry. Tuesday will give you its entry. Wednesday will give you its entry. Thursday will give. That's how you add positions. That's one of the best ways to add positions. And also, on Tuesday, met his target. So if you were taking these highs on Tuesday, you would have been done. Then on Wednesday, the second position on Tuesday took these highs. So if you also took this position from this higher low right here, you would have also been done, right? And now you have another trade on Wednesday. And now on Wednesday, you'll be targeting these higher liquidities. And there you go. So this was how this was how I caught my trade this week. This was everything that happened this week. Immediately price took these highs, we were done. And now we know that we have this distribution around here. This is a distribution, right? This is a distribution that swept these daily highs, swept all of these daily highs. This distribution swept these daily highs. So we know we want price to come into this other block right here. So this is where we'll probably get out of our trade. So now you just keep holding until price gets here. So this is how you trade your positions, right? And this was how we got out of our trade. This was a very, very beautiful trade for the week. So um, if you have any questions, feel free to ask, you know, and then I'll definitely do more analysis on our next video. Now look at what's happening here, right? After price, this was on Thursday. After price is trending lower low, lower high, lower low, lower high, lower low, break of structure. So now price has broken structure. So what do? You start buying to take price up even further. Because if we go to the daily time frame, let's not forget the higher time frame bias we have in mind, right? If we go to the daily time frame, right, we are bullish from here and we want to see price continue being bullish. Like this is higher low. So we want to see price create higher high, then maybe come back to higher low, then come back. We want to take price into this higher low. And this is our target. This high is our target. So while you are trailing your profits, right? While you are trailing, since you are in this position, you just keep expanding your profits like this, right? And this is how you catch a very good position that just keeps running. So you don't need to trade every single time. So this is Thursday now, right? So now the higher time frame is telling you that we are bullish. And then on the 30 minutes, we can see that since price has come into this distribution, right? Price came to the distribution and then sold, right? You could have taken your profit from here and gotten out of the trade, like I said, but you can't get out of all your trade. Like you can close one or two, but maybe with your higher time frame perspective, you can just keep trailing. Now, what happened here is as soon as price broke this structure, it's telling you now that the higher time frame, it wants to keep on going up, right? So you start looking for zones to buy, like this imbalance. You can buy from this imbalance right here. You can buy from this imbalance right here, as you can see, because this is the this is the this is below the daily opening price, and this is where you buy from this particular CRT candle right here that price refused to close below. I see that would have been your entry, or you can even buy from the daily open. After price took after price took this low and then closed engulfing candle, then you can just open your position from here like this, right? And your stop loss just anywhere around here, and you just continue to trade. So now this is just how you do it. Right? You can see, just continue to trade your profit. So now what's happening is price has created, from this range, you can see it's being bullish, right? From this high, it has created a low, and now it has created another high. So now it's becoming very, very is expanding very, very bullishly, right? So this is Thursday. Like I said, every day would give you its own setup, Tuesday, Wednesday, and now this is your setup for Thursday. Let's see. Let's see what happened during the week. I don't trade on Friday. So by Friday, I was already out of most of my positions because I don't trade on Friday. But then price kept going up. So this is how the market closed, right? This is how the market closed on Friday. So as you can see, the same thing happened here. The market came down, created a lower low, lower high, lower low, and then broke structure. So immediately the market breaks structure like this, you start looking for your buy position, and then look right here, the daily open again is where you would have bought from. So we have this other block right here. We have this other block right here. That's exactly where you could have bought from, because why the price is also just at the daily opening price. So you just put your entry and then that's it for Friday. So you see, this was how we caught this was how we traded this week, and it was very beautiful. It was a very beautiful week. It was a very, very textbook, easy setup, a very bullish week. Next week, I'm expecting I'm not going to trade on Monday. So I'm not going to trade on Monday. I'm just going to see what happens on Monday, Tuesday. By Tuesday, Wednesday, the market would have given us a direction of where it wants to go. But realistically, you can see after price broke above this distribution, right? It used this as support again before breaking structure of this high to say, okay, now we're going bullish, then coming back and then just continue to buy, right? So we're still going to be targeting these highs. Obviously, we're still targeting these highs. This is where we want to see price come on a long term. So next week, let's see how the market is going to present itself next week. And obviously, we're going to have some retracement, right? We're going to have some retracement, and market has created higher highs. I've been expecting it to take these lows, and I'll be expecting it to come into this imbalance. So if it comes into this imbalance and then we see a break of structure, then we continue to buy into those zones. So from this imbalance, anywhere, in these zones would be a valid place to buy. So we're not going to trade on Monday. Um, So what I do is I just put these lines in place because they help me to be patient, right? If I can see, if I can see it like this, then I'm like, okay, I want to see what Monday is going to do. So probably maybe Monday is going to come down into these zones, right? And then break structure. Tuesday will sweep Monday's low. And then if I see any break of structure on Tuesday, I buy breaks all this low, comes back. Wednesday, maybe sweep a low from Tuesday, come into a key zone, break again. And then, just something like this till we get to these zones, right? Till we get to these zones. So every day is going to give you its own setup, but you have to be patient. If you take a loss on this day, you take a loss on Monday, that's -1. But if you don't trade on Monday, that will be zero. So you have more capital to trade. So you have more capital to trade on Tuesday. Let's say you take a loss on Tuesday, that's -1, 1% or -2%, but -1%. Then on Wednesday, you get profit. So let's say plus 3%. Thursday, you make profit plus 3%. And Friday, I don't trade on Friday is not, I don't really trade too much on Friday. The probability is like let me say 60%. I'm going to give you guys the probability. So on Friday, let's say you take a loss. Let's just say you take a loss. So now you made a loss of 2%. You made profit of 6%. At the end of the week, 2 - 4, you're going to be in profit of plus 4%. So the goal, right? The goal is to always end every week in profit. every week in profit. If you overtrade and you're taking a lot of losses on one particular day, another -1%, you're going to be stacking losses for no good reason. Even if you get a win, let's say +3%, it doesn't matter. But over trading on this day, you trade again, you make -1%, or you have bad risk management and then you overtrade and -2%. And on this day again, you overtrade. You get the picture. At the end of the week, it's going to be very messy, right? You just want to trade one trade a day because you only have the market is only going to give you one setup a day. So if you miss it, then it's fine. Um, Monday has less than 30% probability of your trade working out on Monday. Tuesday has a higher percentage of, I would say 50% of your trade working out. Wednesday has 80%. And it is the most volatile. It gives you the most pressure. You can see the bullishness from here. You can see the pressure from here, right? And then Thursday also has 80%. Friday, I would say has 50% as Tuesday. Now, the reason why Wednesday and Thursday have such high percent in volume trading is because most fundamental analysis come out on Wednesday and on Thursday. So those are like foil for the market that pushes price up. All right. So with that being said, I think this is everything right now. I've explained how we caught this trade for the week, right? I've shown you guys. I've also shown you guys what I expect for next week. The market might not be bullish. This is just what I expect because we are in a bullish run and I'm looking at these key zones. But because I'm not going to trade on Monday and on Tuesday, I'm going to allow Monday tell me what it wants to do. So Monday might break this zone, right? Break these lows and then it retraces. If Tuesday also retraces to this zone and breaks structures again, then I know we're going to be selling. So because of Monday and Tuesday, it will give me a direction. Then Wednesday, I will have a high probability to trade price. Maybe it wants to sell further into these lows, right? So um when you have an analysis or you have an expectation, you also have to allow the market play so that you see if it's playing to your expectation. If it's playing to your expectation, then you can go in. But if it's not playing according to your expectation, then you just wait and then you say, okay, maybe it's not going to work because it's not playing according to your expectation. Don't start doing your analysis over and over again. You understand what I'm trying to say? So that should help you guys to be consistent. With that being said, this should be all. If you have any questions, um, drop them in the comment section and I'll be sure to talk about it um, on my next analysis. I hope you guys enjoyed the video. Cheers.